All right, so quick story. I remember I had a client come to me. She said, "Hey, I owe the IRS over $400,000. I just need help negotiating an installment agreement so that I can get out of collections because they're trying to levy my accounts. They're trying to take my money." And so I said, "Okay, let's take a look. I can help you negotiate an installment plan, but let's kind of start with the basics. Income minus expenses equals profit or loss." I said, "Hey, let's first make sure that we have all your income captured properly. Let's make sure we have all your expenses documented." Now, she had a bookkeeper, and I was like, great, because that saves a lot of work. But when I started looking at it, something seemed off, that she was out of money at the time, made a lot of money, and her profit seemed high. And I was like, "Do you recall having this much in the bank?" She said, "No." So I took a look at everything, and I was like, "I need every single bank account you have, every single credit card that you have." She got all of them. And guess what? Turns out it was like 5 or 7 bank accounts that were missing from her financials over the past 3 years. And what that resulted is she had an extra 2 million unaccounted for in expenses. Here is how tax strategists think when it comes to eliminating taxes. One of the first rules of accounting: trash in, trash out. Firstly, we have to make sure that the numbers are accurate. What determines tax is something simple. Income minus expenses equals profit or loss. This is the most basic accounting equation. So what that means, let's just say 100,000 brought in, that's income. Let's just say they spent 90,000 in expenses, that equals 10,000 in profit. That's ultimately what determines what you pay taxes on. A lot of people see money coming into the bank. They think, hey, I have to pay taxes on the 100K. No, you're only going to have to pay taxes on whatever's left over, which is why as a tax strategist, we're trying to properly identify how much you have in valid tax expenses and or credits so that we can see what is your actual taxable income. This is EBITDA, which basically means earnings before income taxes or dividends, etc. One of the biggest things we have to do first is make sure these people's numbers are accurate. So many times their income number is going to be pretty spot on for the most part. But where we found out is that people's expenses are usually under captured and undercoded, and that happens in the accounting level. One of the biggest things I do is we do an audit. So we get a person's all their bank statements for every bank account that they have and that they spent from on business. So ideally, they should have one business account or business accounts, but they should use their business account to receive all their income. Then they should use all their business account to spend from as well, and or a business credit card. Now that's how it should work. But what actually works is many people have commingled income and expenses. What I mean by that is on their business card, they're handling personal transactions like going to the movies, Netflix subscriptions, vet bills for their pet. In actuality, doing that, the IRS can say, hey, your expenses are disallowed because we don't know what's real and what isn't. General rule of thumb, you want to keep business, keep that separate from your personal. And you just do that by having a different account. If you use Chase Bank, have a Chase business account and then a Chase personal. So anything business related, which is going to be, let's just say you're running Facebook ads or something like that, G Suite subscription, let's just say your AT&T, to say your personal, your Netflix, groceries, something like that. But unfortunately, many people mix these two up. And as a result, like all of these are all listed together. So biggest thing I do, so sometimes when the bookkeeper is looking at things, or if they don't have a bookkeeper at all, and they're just guessing on what their expenses are, the numbers are going to be just inaccurate. What we do is we literally go through, we list out every expense that they have, and then just based on our experience and based off of their industry and also based off of what should happen, we can easily see, but then some of this stuff could be added back depending on if it's a personal thing that they use for their business. When that happens, and if they have something called an accountable plan in place, then that's basically an expense reimbursement policy that's already pre-established, letting the IRS know, hey, the owner is going to be reimbursed for these various things from their personal that can be used for business. In a nutshell, one of the biggest things I'm going to do is ask for all of the statements for the bank and credit card statements so that we can literally properly reconcile, basically go through all your information and make sure it's accurate. That's one of the first steps in order to make sure that profit and loss is accurately reflected. Or profit was overstated. Let's just say if for expenses only showed 10,000, profit was 90, but it was actually should have been 10,000, Well, then actually you can see she more than likely paid 9 times more taxes than she should have. And that's exactly what happened in her case. Instead of owing 400,000, once we accurately accounted for her expenses, she actually ended up getting a refund, y'all. A six-figure refund instead of owing nearly $500,000. So that's why it's important to do your accounting properly. I'd recommend accounting software. Make sure that 100% of your accounts are connected to it. 100% of your business related accounts are connected to it. If you're commingling your money, I would not recommend commingling at all. And ultimately, just make your business account, make all your income and expenses live there. And for your personal account, make all your personal income and expenses live there. And where it makes sense, you can do an expense reimbursement, account transfer, but you want to do your absolute best to keep things separate. Hey, this is Charles Hopkins, your tax strategist, just looking out for you. Hope you have a great day.